session that all are based on previous year memory based questions. So these series of the session are very important from the exam point of view. So now let's start the session. And one more thing, that please maintain the notes as well. So now let's start the session. One update from our side, that is we are also going to start a foundation batch, and that batch is going to start from the 7th February 2022. In this batch you will understand everything from zero to advanced level, and by subscribing this batch you will get the mock test, ebook, as well as the live lectures. So you can also just subscribe this batch by using the code Y422. By this you can get maximum discount on this pack. Okay, so now let's start the session. Okay, so first question is, a sale of goods to Ram for cash should be debited to which account? Okay, like I always explain in my lecture how to make debit and credit entry for any transactions. So the first thing you have to do, you have to first recognize which accounts possibly included in the transaction. Okay, so like this is a transaction where goods is sold, where goods are sold to Ram for the cash. Okay, so we have to just make a debit and credit entry for this particular transactions. So we have to first recognize which possibly accounts, or say what possibly accounts can be included in this particular transactions. So the first account that can be, as it obvious, very obvious, that is if the goods are sold, that means one account is, that is sale account. Fine. And the second account that can be because a sale of goods to Ram for cash. Okay, that means there's another account that can be possibly included, that is a cash account. Okay, so the first thing that we recognized, the possibly accounts, or say what possible accounts can be included in the particular transactions. After that we have to recognize the account related to which category of the account, like it is related to a personal account, or say real account, or say nominal account, which category of the account. Like we all know that the accounts broadly categorized into a personal account, real account, nominal account. Okay, so as we all know that the personal account related to a human being, or say artificial account, real account, all the assets and liabilities comes under the real account, nominal account, all the expenses and the incomes, all the expenses, incomes, loss and gains, all comes under the nominal account. Okay, so as we all know that the sale is a type of the income, sale is a type of the income for the company. So all the income and all the expenses comes under the nominal account. That means sale account belongs to the nominal account. Okay, cash account, cash is related to our asset, and all the assets comes under the real account. So that's why this would be categorized into the real account. Okay, after that, the second step done, after the second step done, you have to now understand golden rule of the accounting says for the nominal account, that is debit all the expenses and credit all the income and gains. Okay, this is the golden rule of the accounting. Like we understand, for the nominal account, that is debit all the expenses and credit all the incomes and gains. Okay, and for the real account, because all the assets and liabilities comes under the real account, so for the real account, that is debit what comes in, and credit what goes out. Okay, and for the personal account, what are the golden rule of accounting says for the personal account? Anyone can tell me what the golden rule of the accounting says for the personal account? That is debit the receiver and credit the giver. Okay, so like the first thing what we have to do now, just remove all the thing here. After that, look, what you have to do whenever you just find any transactions and you have to just make the debit and credit entry, the same way like I am explaining here, the same way you have to follow, and you have to solve the same way in the exam. Okay, so like in this transactions, you have to first understand what type of the accounts can be possibly included here. So the first account that can be possibly included, first is sale account, and another one that is a cash account. Suppose that in the question, like sale of the goods to Ram for for check issued, or say for check a sale of goods to Ram, and the Ram issued a check for this, so then the bank account would be included, and bank account is also an asset for us, so that's why bank account also comes under the real account category. Okay, so if it is mentioned here cash, that means the second account, that is the cash account and the sale account. The second step, that is you have to understand the whatever the accounts we just discovered, that categorized, or say that mentioned in which category of the account. So the sale account, that is all the income and all the income gains and all the losses and all the expenses comes under the nominal account. So sale is a type of the income for the company. If the sale is happened, that means this is a type of the income for the company, so that means that would be comes under the nominal account. And the cash account, that is a cash is an asset for the company, so that means that would be a real account. After that, a golden rule of accounting for nominal account says a debit all the expenses and credit all the incomes. That's it. You have to understand by this, that is nominal account, debit all the expenses and credit all the income, and this is the income for the company, that means it would be credit. And the cash, because cash is receiving, or say for the selling of the good, for the selling of the good, a cash is coming in, cash is coming in for a company. That means if the debit, what comes in real, for golden rule of accounting for the real account says that is debit what comes in and credit what goes out, but here cash is coming in, that's why cash account would be on the debit side. So if we have to make the entry here, so how we can make the entry, that is cash account would be debit and to the sales account, and it would be on the credit side. This is how we just make the debit and credit entry for this particular transaction. So the answer would be that is cash. So the should be debited to which account, that is a cash account. Cash account would be debited, debit what comes in and credit what goes out. And but sales, that is sales is type of the income, so that would comes under nominal account. So debit all the expenses and credit all the income, that's why it is credited, and that's why it is debited. Okay, I hope it is clear now. Now the another question that is related to which of the following activities can be outsourced by the bank. First, understand what we understand by the outsourcing of the bank. So you have to first understand what is the meaning of the outsourcing. So look, it is basically the practice of a company hiring a different company. Okay, suppose that this is a company, okay, and it is hiring another company B. It is hiring another company for B for supplement. Suppose that A is hiring a company B for supplement its services. Okay, for supplement its services. Suppose that for this is a company A, and this company A hiring a company B for supplement its services. Okay, so B is just supplementing A's services, A's company, A company, or say company A services. Okay, so it is basically the practice of hiring a different company to supplement the services at a lower cost. At a lower cost, like customer, like if we talking about the bank, so the customer care center, the customer care center. Okay, so if you know, the customer care center is basically outsourced by the banks. Okay, it is another company that is hired by the banks, and that handle the customer care portal. That company handle the customer care portal of the bank. Okay, so like customer care center, which is outsourced by the third party service provided by like off-site ATM services. Another one like off-site ATM services. Fine. So that is outsourced by the third party. So in short, if I say a use of the third party is defined as the outsourcing. So you can understand the use of a third party, use of the third party is called a outsourcing. So the important thing that is which services cannot be outsourced by the bank. The important thing what we have to understand, which services cannot be outsourced by the bank. You have to first understand which services cannot be outsourced by the bank. Okay. So the first thing that is bank should not outsource the core management function. Bank cannot outsource the core management functions. Bank cannot outsource the core. Bank should not outsource the core management functions like internal audit, decision making. This is very important because one question you will definitely get in the exam. Okay, that's why I'm explaining here. So decision making function, internal audit, decision making function, KYC norms, KYC norms for like opening deposit accounts. Okay, and management of the investment portfolio. So that's some services, like you have to understand which services cannot be outsourced by the bank. That is a core management function cannot be outsourced by the bank. Simple, in simple terms, like internal audit cannot be outsourced, according like a sanction for the loans cannot be outsourced. But means that means in these type of the functions, bank cannot be outsourced, or say bank cannot be hire another company for functioning these functions. Okay, like compliance functions bank cannot be outsourced, but marketing, if the term is that is marketing of the credit card, that comes under the outsourced by the bank. Okay, so the answer here, that is a marketing of the credit card would be marketing of the credit card can be outsourced by the bank. Okay, fine. So the important thing that is outsourced, what we understand by the outsourced, I hope it is clear now. So outsourced, that is the use of the third party, and I hope it is clear now. That is internal audit, decision making functions, offsite, KYC norms. Okay, KYC norms for opening deposit accounts. That are the some core functions. Or you can also say that there's a core manager functions cannot be outsourced by the bank. Okay. Now understand another question that is related to a depreciation chapter, and we used to just we have to solve this question by using the straight line method. So I hope it is very much clear for everyone. So we always have to understand that is, if we have to calculate the depreciated amount, we have to just consider the total cost of the machine. Okay, whenever you have to just calculate the depreciation, you always have to just understand. Also, always have to just consider the total cost of the machine. So here, if I say that is 8 lakh rupees, 8 lakh rupees, that is a cost of the machine, and after that 80,000 rupees, that is the installation cost, or say installation and the freight charges, that is also included in this 80,000 rupees. So this is called the total cost of the machine. So whenever we have to just calculate the depreciation, we have to consider the total cost of the machine, that is equal to 8,80,000 rupees, and its scrap value, that is 10th year, is expected at the 40,000 rupees. So just write here 40,000 rupees. Okay, and its scrap value, that is given the 10th year. Okay, that means if the after the 10th year, that is the scrap value would be 40,000 rupees. That means this 10 year would be considered as the useful life of this machine. Okay, this 10 year would be considered as a useful life of the machine. So 8,80,000, that is the total cost of the machine, and after the useful life, whatever the amount that is that would be for the machine, that would be called a scrap value for that asset, scrap value, or say residual value. Okay, I hope it is clear. So if we have to just calculate the if we have to calculate the depreciation amount, so we know that that is 8,80,000 rupees, that is a total cost of the machine and the scrap value which is given 40,000 rupees, and it is simply divided by the 10, which is the useful life of this machine. Okay, so if we have to calculate the depreciation amount, so what would be the depreciation amount? That would be the 84,000 rupees would be the depreciated amount. So that would be the answer here. I hope it is clear now. Okay, so that would be the depreciation amount for that machine. Fine. After that, next question, that is also related to our rectification of the errors, or say classification of the errors. It is related to our classification of the errors. Okay. So in the classification of the errors, we read about the error of the principal, error of the omission, error of the commission. So another question, that is a credit entry of the 5,200 rupees to Mr. Akash account was credited as 2,500. Suppose that the entry should be, that is 5,200 rupees in the Akash account, but it is by mistake just credited as a 2,500. So what type of the error it is? It is a error of the commission, or error of the omission, or say error of the principal. So we have to just find out what type of the error it is. So the answer, that is error of the commission. Why? Because this error, if I'm talking about the error of the commission, so error of the commission, this error occur when entry posted either in the wrong side or in the wrong amount. So whenever you just find that is the entry is posted in the wrong amount, or say wrong side, okay, so the this type of error is known as a error of the commission. Okay, one more thing we also include here, that is if the mistake is happened in the totaling of the debit and credit. Suppose this is the debit and this is the credit side, and the mistake is happened in the totaling of the debit side, or say totaling of the credit side. Okay, so if the mistake is happened in either in the debit side totaling, or say credit side totaling, then also be it is an error of the commission. Okay, so for example, suppose that if we have to just post 9,000 rupees in any account, but by mistake we just posted 900 rupees in that account. So this type of the error is known as the error of the commission. That's it. Okay, so error of the commission, whenever you just find the error like either in the wrong side or say wrong amount, then this type of error is known as a error of the commission. Okay, I hope it is clear now. After that, another question that is related to from the ratio analysis, and in this question the current ratio is given, current assets are given, quick ratio is given, and the inventory would be. So the first thing you have to understand the formula of the current ratio, that is equal to the current assets and it is divided by the current liabilities. Okay, after that, if the current assets are given and the current ratio are given, that means from here you can just calculate that is current liabilities. So the current liabilities would be that 1 minute, that is current liabilities would be the 500 and it is divided by the 1.25, isn't it? Because the current ratio is given 1.25 is to 1 and the current assets is given 500, and we have to calculate the current liabilities. So the current liabilities would be 500 and it is divided by the 1.25, and when we just solve this we get the answer, that is a 400. Okay, so from here we can just calculate the current liabilities and that is equal to the 400. After that, another thing that is given, that is quick ratio is given, and we also know that the formula of the quick ratio, that is quick asset and it is divided by the current liabilities. Why here we not included the quick liabilities? Because in the liability case we assume, in accounting we assume that is we have to pay all the liabilities. Okay, so whatever the quick liability or say current liability, so in accounting we just assume that is quick liabilities equal to the current liability, so that's why we included here current liabilities. Fine. After that, the quick ratio that is given 1 is to 1, that means quick asset should be equal to the current liabilities, and the current liabilities that is given 400. So just you from here you can get a quick asset that is equal to the 400 rupees. Fine. So now we understand if we have to calculate the inventory here, and we know that inventory is a part of the current asset, not of the quick asset. Okay, so we know that that is inventory related to our stock, inventory related to our stock, and stock is an asset for us. Okay, stock is an asset for us as well as the current asset for us, but it is not a part of the quick asset. So we know that we have the current assets that is given a 500, and we have a quick asset that is given, look, we have a current asset that is given a 500, and we have a quick asset that is of the 400 rupees. That means the difference between the 500 and 400, that is equal to 100, and that would be our inventory, or say that would be our stock. Okay, so this is how we just calculate these kind of the questions. You have to only follow the concept and nothing else. So from here you can just get the answer, that the answer would be 100 rupees, and the inventory that would be 100 rupees. So this is how we can solve. You have to understand, we know that if the current assets value is given, and we know that the inventory is a part of the current asset, and we also know, we also can obtain quick asset from from this ratio. And if we just calculate the quick asset here, and we know the current assets here, so just subtract this and you will get the inventory. Okay, so the inventory would be, that would be 100, and so this would be the answer. Okay, so that's all for this session. I hope this lecture will be very useful for you, and if you are liking our effort, please do not forget to hit the like button on this video. If you have not downloaded the Adda 247 application, just download this and subscribe the Officers Adda 247 YouTube channel, so that you can get the notifications of the live lectures as well as the notifications of the important news related to the exams. Okay, thanks for watching me here, and thanks for joining me here, and just like this video and share this video to your friends.